Hello traders, hello everyone, my name is Gregor Horvat and welcome to our new video update, Surfing the Elliott Waves, where I will look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the Euro, Aussie, Gold, DAX and crude oil. So again, I will cover some of the markets that we've been tracking in our latest video update from last Tuesday. So here, firstly, on the euro dollar, as you know, I'm still observing two possibilities. Either we are here in the middle of this triangle consolidation from away from 2016 lows for an ABCDE pattern. This one, of course, will see limited upside. In fact, in such case, we should hold this 2020 and 2018 highs. On the other hand, we are also observing potential bullish interpretation if risk on will resume and euro will also attract a lot of buyers. However, the ECB is not planning to interest rates to leave the rates until the end of the next year, while on the other hand you have Fed who will probably do the tapering, and then you have Bank of England who may actually lift rates already next month. So there are plenty of other currencies that could bring a lot more attention to regarding speculations. So in my opinion, I would really not be surprised here if this euro dollar based on ECB policy will actually stay in this consolidation, trapped in this range. However, based on the short-term outlooks here, I still think that both of the wave counts could produce some recovery in the near term, and this is something I've been talking about in our last video. So we are either looking here for a 7 swing correction to complete wave D of that very big triangle, and you could see a wave E rally, or maybe even rally for a wave 5, which is quite optimistic, I must say. But based on the price action, both wave counts are valid and we could see more upside. So currently the most important to look for is obviously the 4-hour time frame. We have these 5 waves down from September highs, and we've been looking and saying that probably this market could see some kind of recovery, even if just in 3 waves. And this is exactly what is happening right now. We can see a very nice only 3 wave movement to the upside after this unfolding divergence put also a low in place here for this pair. So for now we can see price with 3 waves up right into the previous swing lows right here. Okay, so this is very important key structure and key level for, or I should say, bull bear line. It's 1.1660 level. So for me it's very hard to say if the market is going to see more weakness from here or we'll see more recovery. I certainly would love to see some kind of a more recovery based on overall dollar outlook. We see commodity currencies very strong, so we see stocks also progressing to the upside. So euro could at some point also tick higher, but maybe not at the same degree compared to other currencies. So for now, since we are at this Duda level, we really have to be patient here, and let's see what will happen in the next few days. If we can see a push above this trend line parallel of this parallel channel, and then you see let's say a close above 1.17 figure, then I think that we could actually here driving prices to the upside in impulsive fashion. If on the other hand we will see a sell-off back below this trend line support and through 1.1570 level, then be aware of more weakness, because market would then leave behind only 3 wave rally, which is corrective movement. So I know that this may not be helpful for some, but I just wanted to give an update since last week when we were actually saying that in either case we are looking for a third leg to the upside. But now we still have to wait on a little bit more price action to make sure if this is only a wave C rally or maybe even wave 3. Wave 3 is something you want to see in very strong trending markets, while wave C represents final stages of correction. So here, once again, 1.1660 is very important level, and probably we'll get answers in the next few days. Now let's take a look also on Aussie dollar. Now Australian dollar is moving to the upside, probably due to very strong commodity sector. We are seeing copper moving to the upside, and also there was, as you know, lockdown removed in Sydney, I believe, last week. So this obviously has some positive impact on the currency. We have also seen that Chinese yuan has seen some recovery as well recently. So maybe that's what is driving Aussie higher at the moment. Now technically we've been looking for this recovery after very deep three wave movement, but so far very nice and strong 5-wave recovery. Now we are approaching some resistance here at 74.90 and 75 level. It's very important technical level, especially if we also consider that we have 5 waves up, and always after 5 waves up, especially when we are seeing this move into this very strong resistance, there can be some slowdown coming. So be aware of this 3-wave setback, former wave 4. That's something that you would pay attention on if we see a pullback in 3 waves or corrective in nature, meaning very slow, choppy, overlapping price action, which is corrective personality. Then of course this support could be very attractive for more upside, for another bounce. Okay, now looking at the higher degree charts here, now the primary wave count still indicates that we could potentially building bottom formation here and more upside ahead, but real confirmation or important level would be a daily close, or even better, a weekly close above 75.23, because then you would have an overlap with the previous wave A here. Okay, now let's take a look on gold. Now gold has seen a sell-off last week, probably due to this to higher US yields, but even US yields has seen some resistance in the last 24 hours. So we'll see how will this play out. I still think that if the US dollar will be seen moving to the downside, meaning that yields could see limited upside while stocks are rising, and this could send the US dollar to the downside. Overall, this means that even metals can experience some support. Now, from an Elliott wave perspective, I updated the wave count now last week. As you know, we highlighted that we are looking for a push to the upside, and this proved to be only third leg of recovery. So it was wave C of a 3-wave rise from that wave A low. So now when looking back at the whole substructures from or since start of September, I see this as a potential triangle in the making. So it's an ABCDE pattern. So not very easy price action for trading at the moment, since you are still in the middle of this development. But overall, I think it could be quite interesting for more gains on this market once we see a completed 5 subwave structure. Now, generally speaking, I would be looking for a break higher at some point into this wave D that belongs to a higher degree triangle here in this wave 4 consolidation. Okay, so for now metals are not really interesting, at least not gold. Maybe silver is a little bit better if we can break that wedge of a very big pattern there. Then I think that silver could maybe attract even more buyers. But of course, it's very important to look at gold and silver ratio. Now here we have this chart. You can see some very nice breaking point here. So looks like that this makes silver much more interesting. But overall, I mean, when this ratio is moving to the downside, it normally means that metals are in recovery mode, but obviously silver with much more upside potential. Now let's take a look also very quickly at the German DAX and crude oil. Now firstly DAX, we've been covering DAX as well last week. We said that we are expecting gains. So far very nice movement and bounce from 15,000 level, very nice psychological support right at this right shoulders of the head and shoulders bottom formation. So we were looking higher, and there is still room for more upside. Why? Because we are trading out of this downward channel above this trend line, as you can see. So I think that we are now just consolidating, and that we could see more upside possibly this week back towards 1570-60 area. Now looking at daily time frames, I believe that latest pullback clearly looks like a correction that slowed down at the former fourth wave. So very nice technical response away from that levels, meaning that I will, so for now at least, stick with the bullish view. Now let's take a look also on crude oil. Now energy crisis is still around. We have seen, however, some kind of a pullback on natural gas. And we are also seeing pullbacks here. As you can see on the bottom of the screen, you have heating oil reversing quite aggressively to the downside, and you have Brent also reversing to the downside. So maybe there is at least temporary top formations, so more weakness here back towards these supports around $82 here on Brent could maybe limit the upside on crude as well, not only for heating oil and Brent. So it looks like that crude, however, is the strongest, but I would not be surprised to see some near-term resistance. Now, looking at the 4-hour chart here, I still see ongoing incomplete 5-wave rally. That was wave 1. You had a wave 2. Nice, very extended lag for a wave 3. And notice that this late stages of this 5th wave is actually looks like a wedge pattern. So if we can see more weakness on heating oil Brent, then of course, as I said, even crude oil could see some limited upside here, but nothing significant. I mean, all what I'm expecting here is only a temporary retracement here for a wave 4, and then watch out for more upside. Now the support is at 76 up to 78.60, so that would be very interesting area for a new bounce. Invalidation level clearly at 70.50, so bull bear line $70 per barrel. Technically this is an uptrend as long as it's holds. Okay, on a big picture here, daily, yes, we are moving into some very important fib levels, projections for a 5th wave. We have some divergence here on the RSIs as well, which yes suggests that we can be in some late stages of this 2020-2021 bull run, but again, still on the short-term basis, we don't have all completed need subwaves to call or look for any top. So for now, still there is some room left for more upside after retracements. Traders, thank you very much for your attention. I hope that you enjoyed this video and talk to you soon. Bye.